This is Right Side Trader. Today is March 1st, 2025, and this is my weekly Trade to a Million SPX Iron Condor trade review, where I'm placing a 10-watt Iron Condor 0.2 delta thereabouts, and I'm trying to see if I can do this trade consistently and make $1 million with it, because I think it's possible. I know it's possible. I can see that it's possible. Although this was another tough week, little shell shock from past Friday, and it showed up in my trading on the first couple of days. Things then kind of settled out. Plus, with the market dropping, it was kind of a rough week. But I'm gonna go through it all with you. I'm gonna show you what I did, show you show you what I did, and I'm trying to be upfront with you with what I'm doing. This is all for educational purposes only. No trade recommendation, because as we all know, trading is risky, and you can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. All right, let's jump over here to this trades and stuff and see what I did and see how things went. It ended up being a profitable week, but I had to work for it. I know it ended up being a profitable week. It was a profitable week, and I had to work for it. Just put it like that. But I'm going to show you. On Monday. Still a little shell shock from Friday, from taking a pretty big loss on Friday and seeing that stuff drop. And all kind of caught me off guard. And I did do some things on Friday also to try to make back. And then I was in that whole mindset of being defensive, but still want to put the trade on. I was a little bit impatient about probably getting into the trade. I like getting in that trade that first 5 minutes. With that first candle being green like that, and volatility I think was still inching up. It wasn't as high as it got later in the week, but you don't get the credit, right away. And that's one of the things that I learned, after going through this a couple of days. Be a little bit more patient about trying to get a little bit better credit on these things. Try to get that. If volatility is up, try to get closer to that $3 credit on this thing if you can, still within that first 5 minutes. So that's what I did later, and kind of give you a heads up on what I did later in the week and what I was doing. But on this day right here, I was able to put that Iron Condor on, the 60/70 by 80, 59.95 by 85 on the put side. Did receive a $2.40 credit. Ended up with a loss. This thing started going against me. Again, being in the whole mindset, I'm not going to let this turn into a big loss again. I took a smaller loss. That is a smaller loss. Again, you got to remember, you receive that credit, even though you're taking this debit here on this trade. If I'm saying this right and doing this right, I can still say, okay, I got that in my account, but now I have to take that out of my account. So I took that out of my account plus an additional $2.60 on that trade. So what I ended up doing, I started looking around the market at the time. How can I make that money back? That's what I got $2.60 that I need to make back. I did a spot trade, but I only did it with 10 contracts, so that ain't going to help. I noticed that right away. That was the first trade that I did. Then I started doing some verticals. That's what I usually do when I'm trading real large like this, and I'm trading, trying to make some real money back. I'll go to my vertical stuff and seeing where do I need to do these verticals at. And a lot of times I do just what you see. I sold it underneath the market here is what I was doing and trying to collect something. I got $1 on that with 100 contracts. Then I started trying, okay, I can buy a put, thinking this thing going to go down. Ended up losing. And with that, the thing is, when it comes with the SPX options, they're definitely not a product that you should buy. If you're going to buy it, you better have some kind of indicators and tools to let you really call direction right. I ended up losing $7 on that trade because, again, it's going to go down. It's going to go down, and this thing's steady going against me. I ended up taking a $7 loss, but again, it was only with 10 contracts. 10 contracts still times $7. We know that's still a lot of money. That's $7,000 for you guys who don't know. I went back and I did my Iron Condor. Then I started thinking about, I did an Iron Condor last week, an overnight type position. I wanted to go ahead and put that position on. I did that position also. I had done that position over the weekend, and I was able to close that trade, but it's only one contract. I was able to close that trade, and I made $1.70 on that. One contract, $1.70, that's just $170. And that's kind of like what I do in the live account. One contract, and it's a small account too anyway. Then I had to come back and again, I did a call. Again, me doing calls. Calls usually is my thing. I see the market going up. I don't see the market going down. I see the market going down, and I just get out of the way. That's the whole thing. I saw a little play. I did a call play, and I made $1 on that. Then I did jump in there with 100 contracts, and that made $1. So that's $10,000. But I'm still down for the day. and it's only like $3,000 off of that loss that I really had up here. So I'm still down close to probably, with all this stuff adding up together, I'm still close to about $15,000 down for the day. And I'm kind of okay. Usually I'm okay with that when I'm trading large, because I know I can make that back in a day sometimes. On a good day, I'll make that back in a day. But usually that's going to take about a couple of days to make back. So, and doing this virtually, that's what I'm trying to see, where's my mind at, where's my whole mindset at, how am I going to react when I'm doing these type of things, and am I in a good place, or am I in a crazy place and I shouldn't be doing this at all? And after Friday, I was like, I was in a crazy place and I shouldn't be doing this at all. But I told myself, you got to work through this. You're getting into volatile markets and you got to see how you can play through this, if you can play through this at all. Again, kind of remind myself, this is virtual. You do not have to trade live. And that's what I did. I stopped trading the live trades. Because again, this is a new thing for me. I know when the market is going down, I usually like sitting on the sideline anyway. I'm not one who like buying the puts or trying to even buy any of the inverse things that are out there to play the market down, because they don't move as well as you would expect them to move. If you can buy the put and play the put right, the put is the better thing to do if you can play it right. And just enough of that, though. Let's move on to the next day. And that was a lot there. I did a lot on that Monday, though. That's the whole thing. I did a lot. And again, it starts getting stressful before even going to work. So I'm going into work tired and sleepy. Nothing but that. But no, on Tuesday, I was able to place that iron Condor again, 60.30 by 60.20. On the call side, on the put side, I was able to do 59.40 by 59.30. I was able to, again, now I got back to it. I wanted to get that $3 credit. I got that $3 and some credit like I wanted to do, but that market started coming, and I got it in early this time too, but that market started coming down against me again. This time I decided to go ahead and take that small profit. Remember before I had said sometimes it's better to take that small win, make it, and I need to make at least 20 cents on the trade. I made 40 cents on the trade. And as we can see later in the day, this thing did play out, but if this thing was doing this all day, it would have caused me to panic. It got up to the 11 o'clock. It would have been a loss, a big loss. So I'm kind of okay with where I'm at mentally doing this. And I did do some other trades and I made 60 cents playing around out there and doing my verticals or doing my directional things. I'm not going into the detail. You'll see that I'll show you the accounting sheet and all. In the account too, not stuff that I've written. So you'll see what's in the account. And I made 60 cents, and I had 100 contracts when I did that. So that was an extra extra $6,000 that I made there. So again, I made up for the day about what I like making a day on this. What I can see that I can actually be making a day on this trade, anywhere from $5,000 to $7,000 is kind of like normal and all. So this was an okay day, even though I had to do a little extra work in order to make that. So now next day, Wednesday ended up being another crazy day to the upside. Again, I waited and I got that $3 and something credit with this high volatility going on out there in the market. So I took that, but then it started going against me on the upside. And I said, oh, what now? Not another day, with this thing going crazy. So what I ended up doing, as it started going against me, I was able to close my put side. You can once it starts going against you, you can close your put side for about a nickel. It happens real quick when you're selling out there that 0.2 delta. So I closed that put side real cheap. You'll be able to see it on the account thing. And then I ended up rolling my closing my call side and rolling my call side out in time. And I did roll that call side up a little bit, and then I put another put. I did them separate, and then I did a put side, as you can see where it was trading at, right at the money, so I can get that maximum credit. Because again, I said if it's going to go up and continue going up, that's what I was thinking before I put this trade on, and that I'll be okay. But then, as you can see, the market went against me, went through both of those strikes that I got on, but I have time on it. I know I had 12 days. I was saying I'll be in this thing maybe for a week. Whatever's going to happen in this market, maybe in a couple of weeks, it would be done. That's my mindset. That's my thinking. That's how I usually do it. And if I'm selling stuff on my positions and all, I'm usually selling it anywhere from 10 to 20 days out. And I usually like keeping it less than 30 days because I want to be at that bend point where that theta decay is really working for you if I'm selling something and all. So that's what I did there and all. and you got a little time to manage it, and you'd have to be active in it on manage. So again, my ideal, I got here closed 3-3. I plan on closing this one that I had rolled, this March one, and on Monday, really. I don't want the market to go, and test my strikes here on the call side. This trade, as you're going to, I'll probably be able to show you that. This trade is already profitable and stuff, even where it's at right now, because of that theta decay, But that's that. So, but the thing is, when you got this trade here on, and it is the same size as the other ones, it's eating up some of your capital, So now it gets where you don't have as much capital to defend yourself when things start going bad. So that's the only downside about this right now. So you got to make sure. And again, it gets back to where, based on your account size, you need to trade. You need to have your position size accordingly. I would say at the max, 10% of your account. That's just me. Some people may say at the max, maybe 1% of your account. Because again, if you end up having a big loss, if you're only losing 1% of your account, that shouldn't hurt you. 1% of your account, you should be able to make at the max, I would say, a week. Because again, it shouldn't take too much to make 1% of your account, unless you got some crazy amount in your account, in your account size. I don't know. Like you said, if you got $10 million or something in your account, and you're trying to make 1% a week, that might be kind of hard. It might be. I don't know. I'm not there, so I don't know. So let's go ahead and go down to Thursday. I was able to put that iron Condor on again for 620 by 630 on the call side. 59.35, 59.25 on the put side. I got that $3 credit again. This volatility being up, I know I should be able to get that $3 credit now. And also, I'm kind of patient. I kind of set it, and I see how the market is actually doing, both live and virtual, and seeing this is really possible and really real. That can happen, and yes, it can happen, I was in there and out of there. And as you can see, this market did this thing again where it came down here and test me. But this time, by Thursday, I had relaxed quite a bit. I wasn't panicking and thinking I had to do something and thinking the market was going to go crazy on me. I kind of just took my time, and the market pulled back a little bit, and as soon as I could get out of that trade, I was out of that trade, and that's what I did. And look at there, I got $1 on it, a little over $1. So, and that's what I'm seeing. I'm seeing this happening, and it's kind of nice to take yourself through these type of exercise. Even you can also do it on Think Back if you want to, if you're that type of person who can do that. Me, I have a hard time playing around with Think Back and trying to do these type of trades with Think Back. I'd rather just do it in the live market, and I have other stuff going on anyway. So with live trades, so just having to make money on this trade, it's something that I'm preparing for. I'm trying to get ready for, trying to see if it actually works for me. And along with the other data that I get from some tasty traders, the tasty work, the data and stuff that they collect, that kind of helps me out too. And then one of the things that they came out here this past week, I saw out there telling you how you have to aggressively, actively manage these trades and all. And that's what I've been doing. And that's what I see. Again, I found that out before they even put their video out. I realized this is what I got to do, because this is what I had to do before when I was doing this stuff. So, and you actually going through it, and now they confirming, yes, that's what you need to do. It really helps me. That's the whole thing. I like listening to that, and I like having them have real data, having data. Not just their opinion, not what they think. They got data, fact. Like we say at Right Side Trading, fact-based trading. Again, and that's what you want to do. You want to know the numbers. So again, like this trade here, again, I was happy that I got out of it. It tested again and ended up going to being mother of all losses. You can't hold these things all day. That's bottom line. That's one of the things I definitely have taken away from here. You can't hold these things all day. So now Friday. Let's go to Friday. Friday was one of those strange days. Friday was one of the days that I was thinking I wasn't going to be in front of the computer, but I said no. I'm gonna go ahead. I had actually took off on a bike ride, started to take off. Then I said, let me go back. Let me go back and place this trade. It's just a virtual trade, and I need to do it. So I placed the trade out, and I saw $4. It was going, as you can see. I was trying to get it around my 0.2 deltas. I don't know if my deltas had slid a little bit on me or not. Volatility was above 20 also. That morning there, and all. So again, I saw the $4 stuff popping up, popping up, popping up. I said, I'm gonna see if the thing will feel for $4 or something. Got a $4.50 spread. You very, 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 very seldom going to see that. But I've seen it before when this thing is going against me at all. It gets to $4 and something, and it come back. Where somebody else also asked about how does this thing work as a debit trade, and all. Can you do that? Can you buy low and sell high on this trade? Also, that was a good question, and I kind of gave that the thumbs up because. I would like to know how is that data working? Because again, sometimes you can buy this thing when the volatility is kind of low in the morning, or the prices. Sometimes the prices are low, and then as it moves against you, going towards one of the strikes, based on where you got in, it's going to be at a higher price. So now you can close it, at a higher price. You bought low and you sell it high. So you're doing just the opposite, and you can make some crazy money doing that. I did one of those trades too, and some of those other trades that I did. When you look in the account, you're gonna see that I opened as a debit, and then I closed it as a credit, because this is something that I've been seeing, So you'll see that too. But this day ended up being a great day. Ended up making almost $3 and something. No, $2.70. Yeah, so $2.70 now. So that's why again I brought the week back. I feel good. I'm back on track, and I'm learning a lot about how to trade in these volatile markets. One of the things that this is the last one, and one of the other things that I was thinking about when placing this trade is maybe going further out on the delta, since I'm getting this high credit anyway, and but I think the thing is, should you go out and take a lower credit, and thinking you're going to be able to get out, because again, you're trying to sell high and go and buy back lower. But in high volatile markets, you probably still need to get that high credit and get out of that trade. Or if volatility is going to continue going up on you, if you buy this thing, at a lower price, maybe around the same price that you were selling it at, around $2 and $3, but below $3, and being able to sell it at $4.50, close it, buying low and then selling it back high. That's one of the things that when that guy asked that question, I said, yeah, that's what I want to know that too, especially in markets, what's happening right now, And this is one of the things that we as traders, I'm a trader who want to know that information, and I don't have these guys got. I hope they pick that information up. I hope they pick that guy question up about that, and of course that would be kind of. Usually, you're going to think it's going to. I think it's only going to be in certain market conditions that will actually work in these high volatile markets like this. If it's really high and volatility comes down, that's going to help you, and if it's down in the morning and volatility goes up during the day, because you can end up buying it low and selling it high. That's what you want to do. Or if volatility is high again and it's going higher, again, volatility is going to come into those options. You're buying it at a low price and it's going higher. So it's a couple ways that volatility can actually help you if you actually buying these things. With this particular trade, I think I want to know. I don't know. I like to see the data. That's all I can say, and I need to just leave it at that. Right now, though, I'm going to continue selling, and at times, based on me being in front of the market and seeing what's happening, I might do that debit trade if I think I'm getting in at a low enough price and can get out at a higher price, and I see the market trending in a certain direction. That's the other thing. The market also has to be trending in a certain direction, so you're going to be able to get out of this thing at a higher price. So that's all I really want to share on the charts and what I'm seeing on the charts in my actual trades. Let's go over to the actual trades that I actually did, my trade history, where you can just take a quick look at that, and I'll go ahead and wrap this on up. I'm going to scroll all the way down here to the what was Monday? Monday was the 24th. Monday was the 24th. Monday was one of those crazy days. Let's go down here. Yeah, this is Monday. Option. Oh, see, I got a position on. That's why you're seeing that minus 89. But I'll show you those numbers too. Let's just start here. As you can see, Monday, I'll let you just make sure you got all of Monday in here and all the stuff that I did. This right here was me doing one of those overnight trades right here, the 1 contract thing. The 10 contract thing right here, this was that put that I actually lost money on. And I did, like I said, I did a few other trades and stuff and all on Monday. Monday was a pretty active day and most of it, as you can see, It was all with the SPX, and I'm in this account. I'm trying to stick with the SPX, just trading that only here, where it keeps it kind of simple for me for doing my spreadsheet. And now I'm gonna go back here down to the next day on the 25th. The 25th again was a little bit more active day, also. As you can see, this is me. This is closing that overnight trade. That overnight trade did pretty well. So that was one of the things that they did for like a small account, an account that's under 25,000, and you don't want to get hit with that day trading rule. Sell it at the end of the day. I sold it. My end of my day is around 12 o'clock, 1 o'clock at the latest. Me actually trading. So I had sold it and then closed it first thing in the morning. That worked. That day. Will that work consistently? I don't know. As you can see, I did try it again up here. Again, the end of my day, that day was around 11 o'clock. I sold it. And then the next day, this was one of my little scalps. This is one of my little scalps. No, this is the next day. This is the next day. And again, I was able to sell it for $2.50, and I was able to close it for 80 cents. I did it with one contract. Again, that's how I usually test stuff out, especially if I think it's something that I'm going to be able to do in my live account. I want to do it with exactly what I'm going to be doing it with. And I want to see exactly what kind of money I'm actually going to be making. And as you can see, the other little trades that I did throughout the day, again, I said it was a busy day and all. But let's go here, and I stopped doing that. I did it a couple of times, and I see that it works. And again, usually that's what I do. And then you jump it over to the live account, and you start doing it there, where you can do it at. That's the whole thing. Not all brokers. That's the other thing. Be careful about the brokers that you use based on your account and your account size and your plans that you have for your accounts and stuff, and what you talked over with your financial advisor. Because like in one of my accounts, I cannot buy options, and I'm okay with it. I do not buy options less than 7 days and all. So if I'm trying to do one of these spread trades, I cannot do that trade in there because it includes you selling an option or buying an option. It's okay for me to sell options less than 7 days. I want to be able to do that. But I don't. Sometimes in the past, I always was thinking, I was in the mindset, I'm still in the mindset, it's still usually not a good idea to buy options less than 7 days. Because again, it's going to have to be a day trade scalp and all. And I have other accounts where I can do me a day trade scalp in, but I have some accounts where I do not want to be doing any day trading or scalping in those accounts. Those accounts for my long-term investment, for my retirement. This other stuff that I'm doing here is not really quite for no. This is not this might be a retirement trade if I get it really down and all. But I'll have an account set up where I can actually do this trade, if I have to. But enough of that. Back to the here again. As you can see on the 26th, it had a little bit more activity and this is where where I had to do that roll. As you can see, it went out to March 10th. I did get a little. I got on the call side. I got a little bit of a credit or something here. On the put side, I ended up closing it for a small debit, 10 cents, not a nickel, and then I ended up reselling it on the put side, as you can see, out March 10th, ended up getting a $4.10 credit. So that's what I'm talking about. I got that credit on that. That's the credit. It's a little bit more than that of a credit, because on the call side, I did get up, as you can see, I ended up getting a 30-cent credit, because that one I did a roll, on the call side, because it was being tested. On the put side, I closed it and just sold it, and got a credit. So the total credit really is around $4.40, as you can see, But I just recorded it as $4. Good enough for me for right now, especially in this virtual account, to see what's going to happen there. And that was pretty much it on the 27th. Let's go to the 28th. You can see the 28th there And that's the other one. That's the end of it. That's going into on the 28th, which was yesterday, which was Friday. As you can see, it was a pretty straight day. Again, and what I did that morning, like I say, I saw it fluctuating kind of high, I said, because I said, I know I'm not going to get $5. That's right, at all. But I said maybe $4, and it got me at $4.50. I say $4.50, and then I was really trying to close it, around $1.50 or something. But then I started running away from me, and I said, okay, just get me out of this thing. And I was able to close it for $1.80. So again, made pretty good on that trade. And again, I do not. This is all because right now getting these crazy credits and being able to close it like it's being able to close it, is because of the high volatility, the volatility fluctuation around out there in the market. When it gets like this, I've seen it before. This is when you usually get those crazy feels like I was getting that I thought I was seeing when I first started doing this. It's when volatility is how you get some crazy feels at crazy times, So. I'm seeing it now, and I can accept it, but I still do my little staging of my orders where I have to cancel. That's why I don't think I had any of those type of mistakes here. I might have had one or two of those type of mistakes. The one where I did a debit, you saw where I did a debit trade, I think one of them was like a mistake. One of them I wanted to try it, because I had seen where I could get in low and sell high. So, and that's pretty much it. That's it. I'm going to start rambling on. But as you can see, you've seen the charts, you've seen the account. Show you the bottom number. Let's go down here to the bottom. And you can see the bottom numbers also. Liquid value, it's almost at 300,000. So I'm right on target, really. I'm looking to make 100,000 a month. So at the end of February, I would expect the liquid value to be around, because I started off with 100,000. I expect this to be at 300,000. It's saying my stock buying, they double it for your stock buying power, your option buying power, and that's supposed to be about the same. It's a little bit different because of I do have a position on at this time and all. But that's pretty much it. It's commissions. The commissions, almost $50,000 in commissions already in the first 2 months. So averaging almost $25,000 a month in commissions. That's kind of crazy there too. But again, if you're making $100,000 a month, 25, that's still pretty high, that's still a quarter of your account, 25% commission, 25% tax to actually trade. That's what that is, the way I look at it. But that's that. that's that. Yeah, this option -86. If you see this over here, is that position that's on right now. Your profit loss, that's the whole thing. This profit loss, I always that's why I say you need to keep a spreadsheet yourself to see where you actually are at and all, with commissions and all that stuff tied in. You're not going to see this. Yeah, this says over $400,000, but after you take commissions out of that, and it's a position on at the time. That's why these numbers over here don't match that number there. So that's pretty much it, and that's all I really want to share. Hope you guys are finding this helpful. I bet you some of you didn't think I would make it this far and think I would be still profitable. But I've been doing this for a while. You'll realize I kind of know what I'm doing. I know I kind of joke around at times about this stuff. But when it comes, like I was telling when I riding with one of my buddies, I say, man, when it comes to making money, I'm really, I might joke around, but I'm serious. I don't like, none of us like losing money. So this is why I do my practicing and my studying this way and all. So when I do start doing this live, even, I say anything greater than one contract, I'm going to know exactly what I need to do when I see stuff happening. That's how I am. And that's what I hope you can gain from this, where I'm actually showing you some trades, showing you some charts and stuff, where you can also learn. Maybe you can also do this yourself, so you can learn how to study your trades and review your trades and see how this stuff is going to work out for you. And that's why I kind of like, even if you want to go out there and follow somebody and try to listen to somebody, test their stuff out. See if it actually works for you. Everybody in the world everybody can't see a trend or follow a trend and trade a trend. Everybody cannot scalp a market and all that else. Everybody doesn't have the account size maybe to sell options and all and do those type of strategy. Everybody don't understand when to buy options and understand options well enough in order to make money buying options. So again, you need to study this stuff and figure out, what really makes these things tick and what really makes these things work. And there's a whole lot more to this stuff than what you really imagine. Because especially right now, it's a good time right now with this high volatility market and all, and see how things are working for you now. Being able to still make money in a high volatile market, that's something that you need to learn how to do, or learn how to sit on the sideline if you can't. That's the thing. It's because it's just as much as a mind game as it is understanding what's going on out here. And that's it. That's all I really want to share at this time. This is Right Side Trader. Hope you guys had a great week. Hope you guys have a great weekend. And I'll talk to you next week. Have a good one. Bye.